This is Commercial Real Estate Investing 101. We're going to talk about getting into the real estate market in terms of commercial properties. So hopefully you're at the right place at the right time. So a little bit about me. I am a commercial real estate broker licensed in Oregon and Washington. My office and where I live is in Vancouver. I've been an investor since 2011, and I got into this business after 15 years in local government, which really comes in handy because a lot of times we're talking about zoning and property uses and what things can be done on a property. And so I've got a lot of experience from the bureaucratic side of that. And last year I leased or sold over 500,000 square feet and almost 36 million of commercial real estate. So feel like I'm pretty well versed in being able to share some experience and some information with you this morning. Thanks for hopping on today, TV. So next slide. Just wanted to say, obviously, I'm not an attorney or a CPA. I'm not giving tax advice. I am just sharing information from a broker's perspective and as an investor myself. So hopefully this will be useful for you today. So we are, again, going to end by 9:30. We're going to talk a little bit about the different types of property you can get into when it comes to commercial real estate, some financing discussions, some different things you may or may not know about, common pitfalls, what kind of gets some first-time people thinking or kind of grinding their wheels a little bit. And then we'll have some time for some Q&A. So if you could, in the chat, please put whether you are looking to get into commercial real estate as an investment for yourself, whether you want to occupy a building for your business, or whether you want to look at having multiple tenants in a building that you are also occupying, or whether you're just maybe thinking about buying some land and putting up a building or a structure. So if you wouldn't mind just putting that in chat so that I know what our audience is today, that would be super helpful. So you could just put A, B, C, D. If you are in front of a computer or on your phone that you could do that, that would be great. So I'll give you a couple of seconds to do that. And if you don't, then I'll just go on as planned. So Heather, okay, thank you. You want to have your own business and large enough to have other tenants. Okay, great. And offices. Thanks, Gemma. Appreciate that. Thank you both for sharing kind of where you are at. That's kind of helpful as I get along here. So there's different types of properties when it comes to commercial real estate. Multifamily, so that's anything from, we'll get into this, a duplex to apartment complexes, obviously office space, retail, where we go in and out and shop, industrial warehouse space, hospitality, things like hotels, land, purchasing land and doing something with that, and then RV parks and mini storage. So we're going to talk about a little bit about all of those. So when it comes to multifamily, that can be anything from 2 units, like a duplex, and to a fourplex, which you can traditionally purchase with a traditional loan with a lender, typically 25% down if you're not going to own or occupy, and have some multiple tenants in there. And then when it comes to more than 5 units, so those larger apartment complexes, you are going to be looking at commercial financing. So depending on if this is something of interest to you, kind of 2 different sides, this is really the only type of financing or property that you can look at a residential type loan, regardless of whether you're going to occupy it. Let's see, somebody, if I think everybody's muted now. If not, Lyle, if you don't mind muting yourself, I think you're the only one that's not muted. It looks like I can't mute people, so thank you for putting that in the chat there. Okay, so next property type is office. So single use or owner user. So that's somebody put in the chat. You want to buy a property, you want to occupy it. So, you know, insurance agents, financial advisors, they want to have one standalone building. They want to occupy that for their business. And then obviously you can have a multi-tenant office building where you may or may not occupy it as an owner. You might just have tenants in that space. Retail, we all kind of know what retail is. So you can have either a standalone retail building or multi-tenant. So just depending on what you're looking for, what your budget is, some different options out there when it comes to retail space. And then industrial. So that's everything from like a warehouse to flex space that could be used as a warehouse, or it could be broken up in different ways. This asset class right now is very, very hot. It's very hard to find because there's just been so much movement with COVID and online shopping. that there's just hardly much industrial space out there, especially for small businesses, maybe like a contract or something like that. Finding small industrial spaces are just really tough to find. And then hospitality. So that's everything from a hotel, inn, restaurant, resort, golf course. That is also a separate asset class when people are talking about what they're looking at investing in. And obviously these all, if you're an investor, you have different strategies to, each of these asset classes. So thank you for logging on, Carrie. Appreciate you coming and joining us. So another class of property that you can look into is land. So maybe you're looking at opening a nursery or getting into the wine business, using it for some agricultural purpose. And so maybe you want to buy it and build something on it for yourself, or buy it and build for other users, or you're just looking to buy and hold the land because maybe hey, a freeway is going to be coming through here, and I just want to hold on to it because I know the value is going to go up. And then maybe you might want to look at partitioning the land. So you want to buy 40 acres. Oftentimes it's the property is more valuable if you take the time to go through a process to divide those lots into two separate lots, and they tend to be more valuable as two separate lots than the one lot with larger acreage. So that's also another option. And then the last asset class that we often talk about with our clients is RV boat storage and mini storage. Again, another very, very hot asset class. So you can either buy that land and build it yourself, or and then buy and hold. So depending on what your strategy is, there is just a lot of activity in this because a lot of people bought some very expensive toys during COVID, and now they need a place to store them. And then lastly, manufactured home parks. So again, you can either build them or buy and hold them. A lot of investors, if they get into this asset class, tend to just stay in this asset class and then just acquire more parks, either whether geographical location that they want to stay in, or depending on what the cash flow is. So again, can be a very profitable asset class, but of course it's all in when you buy. So we're going to also talk about some different financing options. So if you own a home or have ever bought a home before for yourself, you understand the process of talking to a lender, and within 30 days of getting under contract on a house, you are going to most likely close and get the keys on that house. It's very, very different in commercial. Things take a lot longer. And so I'm going to talk a little bit about that, and then the different types of programs that you can find in commercial. So the first one is just a traditional, conventional commercial loan. And I always recommend to my clients to talk to at least 3 to 5 lenders, especially right now where the economy is changing, interest rates are going up. What lenders won't tell you is they might deny you for a loan that might not have anything to do with you and your abilities to perform on the loan. It has to do with that bank does not want that asset class in their portfolio. And that's almost changing every quarter. During COVID, nobody wanted to lend on restaurants or hotels. So that lending kind of dried up. But as we're coming out of that, that has changed. So I always just tell people, you've got to talk to 3 to 5 lenders because they're not going to tell you that they don't want you or that property. You have to kind of sleuth that out yourself. And you can sleuth that out by they're going to charge you a much higher interest rate than another lender that you talk to. Or again, they're going to tell you that they just don't like that asset class, or you're just not a good borrower when it has nothing to do with you. So you want to make sure that you understand different banks have different programs. Some banks really like to lend only to owner occupied. Some really chase like medical. So you really just need to understand, if you start with your bank, that's great. But you should, if you're working with a broker, which you should, they should be able to help you connect you some lenders that you can do some homework. It's time consuming, but over the long haul, you can save some money and maybe get that loan that you need that another bank might not approve. So not all lenders are equal. You just want to make sure that you understand. And then as that bank is, like I said, changing their portfolio, you may or may not be caught in that while you're looking. And lenders have different requirements. If you're looking at an investment property, not owner occupied, anywhere from 20 to 40% down. So again, that's a huge difference. If you're looking, one bank tells you 40%, another tells you 20, you can save some money right there. So you just want to make sure you're doing homework. Another option when it comes to financing is owner will carry. Not every owner will carry. So you need to make sure right from the beginning that you have that conversation, or your broker has that conversation with the listing agent about whether the owner will carry the note. So basically the seller is going to serve as the bank for a relatively short period of time. They're not going to carry a note typically for 30 years. And then there's going to be a balloon payment. So, typically you might have that seller will carry for 3 to 5 years. And then at that time, you need to then go find another financing option to cash them out. you are going to pay a little bit of a higher interest rate, but on the other hand, you're not necessarily going to have all those bank fees that you would pay if, processing fees and loan fees that you'd be paying with the bank. But there is some monthly ongoing if you use a third party that's going to collect your payments and kind of keep tabs on all of that. So again, not every owner will carry, but sometimes that's an option that if you just need to get into something that you can pursue. Another option is an SBA loan through the Small Business Administration. These loans are not done directly through the government. They are done through banking institutions. And this is for owner-occupied property. You, as your business, are going to occupy at least 51% of the building. And then your down payment might be as low as 10%. And then I'm also going to talk a little bit about SBA VA loans. So the SBA also has a program that if you're a vet, just like if you were to buy a house with zero down, they have special lending programs for vets that want to do owner occupied. So that's not a program that many banks do. I think I've only found 1 or 2 banks that offer that program, but that is another option that requires even probably less than 10% down that could be worth pursuing to help you save some money. Another option is hard money. So this is, you're going to go to a private lender, not a typical bank. You're going to pay probably a lot higher interest rate depending on what's going on in the market. And then you're obviously going to pay some points. So a point is 1% of the loan. So that could also be kind of expensive. And then they're also going to want you to have some skin in the game. So you're probably looking at least 30% down. But sometimes at a pinch, you need to quick close. You just need the cash to get in there, and then you have plans to refinance, or maybe you're expecting an inheritance or something where you can then refinance and do a traditional loan. You're not going to stay on a hard money loan for a long period of time, but sometimes it's quick, it's easy versus a longer term process, which might take you 90 days to go through a bank. So some things that you might want to ask the lenders, because again, they are not all equal. You want to know what kind of down payment. Is it the 20%? Is it the 40%? Or down to 10%? Obviously, you want to know what your interest rate is. Again, they're not all going to be the same. I was getting quotes for a loan for myself, and one bank told me it was over 6%, and this was before the rates even went up. This was back in January. And another bank told me at 4%. So obviously at 6%, that bank didn't really want my asset class because they were really pricing themselves out of the market. You want to know, how long is the loan going to be amortized? Is it going to be amortized over 20 years, 30 years? You kind of want to understand, how that's all factored in. Again, the term and the length of the loan. And then commercial loans are different again from residential loans, where you're not getting a 30-year mortgage and it's just set it and forget it. There is going to be 5, 7, or 10-year terms that you're going to be paying. And then at that time, you're going to need to either refinance or they're going to readjust the rate. So you need to really understand when you're talking to the lender, what are those terms of the loans? Because especially if this is the first time you've gone through the process, it's not as straightforward as, again, if you've bought a house or gone through that process. And then you want to know what the prepayment penalties are. So let's say you get into a loan right now at 6%, interest rates go back down to 3%, and you maybe want to refinance it, or maybe again, you come into some money and you want to make some prepayments. Are there going to be penalties, or will they take that cash with no penalty against you? So kind of maybe seems a little overwhelming and you're not really sure where to start. So obviously I'm in this business. I always encourage people to work with a broker, because as a buyer of investment property or owner occupied, it doesn't cost you any more or less to work with a broker that can help guide you through the process. And then you want to also kind of start that process of talking to different lenders. And that takes time. I just actually got an email from a client this morning that's like, it's so time consuming to talk to all these lenders and I just don't have time. And I'm like, well, if you don't make the time, it's going to cost you in the long run. So you just have to decide. If you only want to talk to one and then they say yes, but maybe that's not the best deal for you. It's time versus money, right? What's more important to you? And then maybe you also want to find a commercial contractor, and a good broker should have a commercial contractor that they can help set you up with, because maybe you buy that space and it's just an open flex space, but you might need to erect some walls, or you're finding an office that you want more of an open floor plan, so you need to knock down some walls. Very rarely, especially if it's owner occupied, that you're going to use it for your use, is it just going to be super turnkey? Now, obviously, if you're buying an investment property that's already occupied with tenants, you don't have to worry about that. But maybe you're going to take over the building and it needs a new roof. You still need to figure out, have some of those connections. And then I always just tell people, especially if you're looking to invest, or even for owner occupied, at the end of the day, you just have to take some action. You got to start writing some offers. You got to start looking, because it's going to be most likely really difficult to find something if you need something in the next 90 days. Just like going through any other process, inventory ebbs and flows. And right now I've got a lot of industrial clients and there's just not a whole lot on the market. So, you don't want to be in a hurry when you're making these decisions. If your lease is up and you're telling me you only have 6 months, we might not be able to find something for you in 6 months or close in that time frame if it takes us a while to find you a building. So I would just say you just got to take some action. So what maybe get some folks into trouble? Before you even get started, if you've got poor credit, that's really something that you should focus on, because of course banks, even if you're applying for a loan under your business, they're going to look at your personal credit. And so you want to make sure that you understand that you have all those ducks in a row. Buying in rural areas, I've had clients that are looking at investment properties in rural areas. For example, last year I had a client that was buying a 5-plex. It had septic. It was on, it had 2 different wells. It was across the street from a gas station. We really had a hard time finding a lender that would lend to them because they just perceived all of these issues with this property. So you just want to make sure that you understand that, banks are going to see that as a higher risk. And we ended up finding a Midwest credit union to lend to them and get that closed. So, and then not understanding a property's return on investment. So especially if you're buying this as a investment property, it needs to be cash flowing. You really need to make sure that you understand those numbers and those holding costs. When those tenants move out, people don't understand that that property and spaces can sit vacant for a long time. 1 to 2 years, you could be looking for a tenant. And so you want to make sure that you understand that, you're going to have some carrying costs if and when that happens, when you've got tenants that vacate. So I talked a little bit about this before, your purchase timing. So if it's, especially if you want to own or occupy it and the building is on the market and has tenants in there, you can't evict them. So you need to understand that, like, is there space in there? When are those leases up if you are going to occupy? Because the bank's going to make sure that you're owner occupying for the down that you're putting. And so you want to make sure that you understand that there's enough time for you to, start that search, find the property, and then close. Because typically the soonest we can really close on a commercial property, if you're going through traditional financing, is 90 days. It's oftentimes longer with SBA, just because you're going to have probably a 30-day due diligence, inspections, and things like that. And then you're going to have, it's going to take maybe 4 to 6 weeks to even get a commercial appraiser out there. And then the appraisal's got to come back. So you just need to understand that things take longer in the commercial world. And then making sure that you understand your zoning. I have a client right now, we were just looking at a space, a property for his landscaping business, and it was zoned business park. Well, we had to go in and make sure that we understood, is his use going to be allowed there in a business park, because it wasn't just zoned straight out industrial. So making sure that you understand that. And then if you have to go through a process while you're under escrow to change zoning, again, you're adding that governmental layer that's going to take time. Sometimes land, for example, might be under contract for 12 to 24 months if they're having to take it through a government process. So again, make sure that you understand that zoning and those types of changes can take time. So I kind of put this in the chat a little bit. I think we either have somebody that wants to look at some land, some office space. So if there's anything you want to add in the chat, you can just, drop the letter in there. But I think for some of you here, I kind of understand where you're at. So we'll just kind of move on. So some questions to ask yourself when you are thinking about analyzing a property, that I just encourage people, just some questions, especially if you're in it more from an investor versus owner occupied and selling it as part of your business if you are owner occupied. So looking at your cash on cash return, understanding, how much cash you're putting in, and then what's going to be the return on that cash. Obviously you're in the business and the investment to make money. So if you're putting in a lot of cash and it's not generating any return for you, you really got to stop and think about that investment. Or are you looking at almost kind of doing, I don't want to call it a flip, but like a fix upper, buy a fixer upper. Maybe you're going to do some facade changes, put on a new roof. One building I was looking at had no air conditioning in the spaces. So that was going to be one of the improvements that I was going to put to make sure that the offices had air conditioning. And then obviously raise your lease rate. So is that something that you think that might be of interest to you? Or do you want to fix and flip? Do you want to put, some new siding or new exterior facade on it? Or what are you doing? Repaving the parking lot and then increasing the lease rates and then turning around and selling it for more. Are you looking at the cap rate? Is that's what's important to you? Sometimes people are unrealistic with where cap rates rates are. And then you want to understand, or if you're going to be owner occupying the building, is that really better for your business versus just staying in a lease? So I always encourage people to think about these things because, you just don't want to buy something and then have it not make you any money. That's the whole point, right? You want to get into this business to make money. So some things to think about right now, because I've thrown a lot of stuff at you. Do you call me if you don't even have any money? And I kind of say that tongue in cheek, but you should call me, because if you're even thinking about, or if you're not in my area, because I don't know where y'all are from, calling a commercial broker and just picking their brain, because I feel like, you can never have too much information. I mean, at some point you have to get started, but what do you need? Where are you looking? What's the price range of the types of stuff that you're looking at? So if you're looking at stuff over $1 million and, you maybe only have 20,000 saved, then maybe you need to have a conversation about where's the rest of that money going to come. Do you want to self-manage? So if you've got tenants in there, are you going to manage it yourself, or are you going to hire a property manager? So that's obviously an additional cost, but depends on the tenants, depends on, what your interest level is. And then do you want something that's easy? Like you've got long-term tenants in there, they're not going to call you, they kind of handle their own repairs, but then you're going to get a lower return on that. Or do you want to be more hands-on and have, maybe higher turnover of tenants? For example, like co-working spaces, people that are only on 1-year leases, you got a lot of turnover, but you can generate more money per square foot on those leases. So, just some things to think about when you're looking at some space. So still, again, lots of information. What do you do? How do you get started? Aside from, getting your team together that we talked a little bit about, is figure out what do you want to do. If you're just like, I'm kind of overwhelmed, hopefully this will at least have given you some ideas of different asset classes that you can invest in. You want to look at your budget. How much money do you have? Because let's be realistic, that could dictate what kind of asset classes and the location that you're going to invest in. Obviously urban areas are going to be more expensive than looking at rural areas. You're going to get your team together so that you can start understanding what's happening in your market. And then you need to take some action. You need to take some step forward, because, talking about investing, reading, going to classes, watching YouTube videos, podcasts, all that stuff is great. But if you don't start writing offers and trying to educate yourself and actually doing the work, we can do all this and not get anywhere. So with that, I threw a lot of information at you. And again, I promise I'd have you out at 9:30. I am happy to hang out and answer any questions that you might have. I appreciate you being here this morning. My contact information is there if you want to have a conversation offline. I'm always happy to chat on the phone or email or what might work for you. Again, happy to hang out and answer questions, or if you're just like, thanks for the information, peace out, have a great rest of the day, and I appreciate your time this morning. So you can either put your questions in the chat or just unmute yourself and ask. And again, no pressure if you don't have any questions. Okay, Heather, how far ahead of identifying a property should you get your financing in order? So that's a good question. Commercial lenders do not issue pre-approval letters. So that's always a little bit of a challenge when I'm working with residential agents, because they want pre-approval letters, and commercial lenders don't do those. So I would say that, if you're thinking about doing something, within the next year, having those conversations with the lenders sooner rather than later is good, because like I said, it does take time to fill out all of their applications and give them all the information, because you want to be ready when you do find that property, because it will take them at least the 60 days to get your updated information and order appraisals. So I feel like you almost can't have those conversations with the bankers soon enough. But then you also have to remember, if you do it too soon, that every quarter, if they're readjusting their portfolio, and let's say you're looking at manufactured home parks and now they don't want to lend on that and they've decided they wanted to move to hospitality, you also don't want to get too far ahead of yourself. So I think if you're thinking about doing something in the next year, that's still a good time to start having a conversation with the lender, because you can still learn a lot from them. And maybe they could have some advice for you on what you might be able to do to be in a better position when the time comes for you to pull the trigger. Let's see. Okay, sorry, I'm trying to read the chat. Okay, good. I'm glad I answered your question, Carrie, too. So, and again, if you, even if you aren't local, I'm happy to introduce you to some commercial lenders. There's, a lot of good banks out there, but they are all really different. They're not all the same. you know, whether you're at US Bank, which is a much more conservative bank, or you look at like a First Citizens Bank, which loves owner-occupied users, you know, they kind of all have a little bit of their niche. You know, and some can close much faster than others. You know, the bigger banks are a little bit slower. So, you know, arming yourself with that information is really important. So, yes, let's see. Awesome. Okay, Heather, if you don't have any other questions, no, I'm happy to stay on and chat with you. Otherwise, feel free to move on with your day. And again, appreciate you for your time.